Okay. So fun and games. Hey Les. What a strange day that was. Oh, just finished watching the Powell talking on the Fed rate hike, and yeah, it's what a strange press conference. Hang on a minute. I need to top up my wine. Okay, here we go. How are you doing today, Les? Uh, 26k, 26k, Les. 26,837. To be precise. Back testing. I hope you're not using indicators for as entry and exit signals. Well, I had a 27k drawdown yesterday. My answer to that is 27k drawdown. What drawdown? What are you talking about? Very good day. It makes up for yesterday. It exactly makes up for yesterday. So we're like a couple of hundred. I think we're at 300. It's still drawdown, but we're back green on the week because we had an 18.5k day on Monday. 27k, just over 27k down in red yesterday. So big swings. So yesterday, my own fault. I need to get away from trading so big. But today, I wasn't even trading that big. So AERC was just really good. Good man. Legendary. So just been watching. Funnily enough, I've been waiting for this this press conference at 2 o'clock market time, which was an hour and 90 minutes ago now, and I kind of finished trading on that. Kind of finished trading at that time when I was expecting. So I was switching on Bloomberg onto the TV. Waiting for the conference to start, and as they started speaking, the market started selling off. AERC sold off as well at the same time, and I was able to get out of the well, I was out of the trade at that stage when it sold off, but I was able to get out earlier. And the whole market sold off, went red for a little while, and then came back. Look, here's the SPY on the 1 minute. This is what happened. So 2 o'clock. This is here. The conference started 2 o'clock. Sold off. Hit the green line, which is like I call it the green line. It's yesterday's closing price. And as he was speaking, he was actually making some reasonable points, making some reasonable arguments, and then it bounced, went red briefly, and then rallied big time. So right now, the S&P 500's, 25 basis point, 250 basis points, 2.5% positive. We've got the Nasdaq, which is 3.9% positive. We've got the Russell, which is 2.8% positive. So all the markets reacted really well for whatever reason. I was expecting such a big rate hike that the markets would sell off, and it just goes to show that the markets are never going to do what you expect. So with such a big rate hike, with such a big rate hike, I didn't expect the market to rally that much. I mean, we're looking at you know, 2.5 points to the green today. So who's this Molly girl you keep talking about? I've never seen her in the Bible series. Yeah, that's probably what it was. Probably what it was. It's priced into that 0.75% rate hike for sure. But yeah, it's been a good trading day for sure. And long may it continue. It wouldn't surprise me, Pen. It wouldn't surprise me at all if it goes lower. I don't think we're done. It's kind of what's known as a bear market rally. You're saying relief rally. It's known as a bear market rally, but something needed to be done. I mean, if you looked at the SPY on the, you put the Bollinger Bands on there, the RSI, it was quite heavily sold off over the last couple of days. So to get back within the Bollinger range, you know, the two standard deviations is kind of what was needed. But are we done selling off? I don't think so. Personally, I don't think so. But let's see. We've got the rest of the week. I think we potentially could see a little bit of a rally into the close today, but then another sell-off tomorrow. Who knows? What have I made today? I've recovered yesterday, so. Oh, serious. Last 2 days for me, I was. Oh, hang on a minute. I was rallying. It's up at 383s now. So I did 18,500 profit on Monday. 27,000 lost yesterday, and I've pretty much made that back today. So we're about 18.5 grand up on the week. So we're green on the week. To be fair, I didn't expect to make the draw to cover the drawdown today. I did say I was going to cover the drawdown. That was never in doubt. Didn't expect to see the drawdown covered today, but it is what it is. No, you probably left when it was 14k yesterday. I actually lost 27 in the end. So I was 27,000 down at close of day. So 14,500 would have been my max loss yesterday. And I think you probably left just before I hit my max loss, but I ended up almost doubling my max loss, my daily max loss. So yeah, great confidence boost in the Fed. Great confidence boost. I mean, what we want to see is a continuation, a market continuation, and another rally tomorrow. Well, it was a lover's tiff, Matt. It was a lover's tiff. I keep saying I don't get married to a stock, but AERC this last week and a bit, this last week and a half. Yesterday was just a lover's tiff. We've made up. and to be fair, I lost 20,000 on AERC yesterday. She's given me back 25 today. So yeah, she gave it all back with interest. But just a lover's tip, just a lover's tip. But I've locked my montage. I've locked my montage. I'm not trading anymore. I locked my montage as I started watching Powell Talk. Stocks breaking highs, yields breaking lows. That's kind of the reaction in the market. So the fun of day trading, absolutely. I don't get married to stocks, Jack, as I keep saying. I think, you know, dirty weekend or, you know, whatever. A nice evening of wine and debauchery with AERC, and I don't mind, but she deserves it. But I thought I cracked the wine out. I opened a bottle of wine while I was having dinner. Put the Fed conference on. I've still got Bloomberg. If you keep wondering what I'm looking at over my shoulder, I'm still looking at the Bloomberg reaction to the Fed conference over my shoulder on the TV. But look, I'll concentrate on you guys for a while. So Powell ended conference 90 minutes in. Good. There you go. Let's have a quick look at crypto. Where's Bitcoin? Bitcoin's not doing too badly. This is Bitcoin. This is on the hourly time frame. So Bitcoin's not doing too bad. I had a bit of a bounce, and again, whether this is anything to do with the wider market, because it does look very similar to the wider market in terms of the movement, but we're back in the higher end of the Bollinger Bands, the Bollinger range. We're back in the mid-range of the RSI. So it looks right now that we're going to trade sideways for a little bit. Wouldn't surprise me if we retest 21. We're coming up towards 22. Wouldn't surprise me if we do retest 21 overnight. Just remember that the crypto markets are open 24/7. So just because the markets close here in 20 minutes doesn't mean the crypto market's closed. And we've still got the out of hours session as well. But the crypto market is open 24/7. And yeah, that's Bitcoin. Ethereum, similar pattern, just different numbers. So almost back up to 1200. Different pattern and different numbers with Cardano. And these are the four coins that I'm in long term. So Cardano is currently back over 50 cents. So I'm happy about that. I still think XRP is at a discount, but it's back over 32 cents, so 32.5 cents right now. So those are my 4 coins that I'm holding on crypto. And if there's a coin that you want to see, if there's a token that you want to have a look at, or if there's a stock you want to have a look at, just roll it out in the chat and I'll pull it up for you, no problem. So who else traded the AERC pump? To be fair it's not just AERC. Redbox made a good move. It went from 10 points down to 10 points up. If you look at the 15-minute on Redbox, and you know, I got an extra 1200 after the stream. So this is kind of when the stream was. So there was a 500 I got earlier, and then this is when I traded it. A little bit of a move up there again, and so we got another 1200 out of Redbox, and then it started moving kind of sideways. So, but still, this big move up didn't manage to say trading AERC. Redbox currently 11.17. AERC. This is where I traded AERC all the way up. So from pretty much going green on the day. This is where I traded it during the live session, the live stream earlier, and then I traded it for the break of 15.50 if you will, and all the way up. So it was busy, and then I will start speaking, and that was the end of it. So yeah, AERC really paid me off again today. AMC. Made its move up and sideways, quite rangy, but sideways around that 1280, 1290 level. Very choppy today, GameStop. GameStop's at 2.5% up, but very choppy. I don't trade commodities or futures, Alfred. As a rule, I might invest in gold from time to time, but more often than not, I won't trade commodities or futures. Boeing. What's the ticker on Boeing off the top of my head? It's BA, isn't it? BAA. Oh, BA. BAE is, I was thinking of BAE, British Aerospace. So BA, Boeing is currently 133. It's having a good day. It's 9% up on the day. So it's doing well. Trading at 130s, testing 134. So it's had a couple of good days in a row. After quite a tumultuous year, it's been selling off. But I think what you'll start to see now over the next sort of 6 to 12 months is travel-related companies. And I know Boeing's not a travel company, but it services the travel companies. So with the engines for the planes and stuff. And Rolls-Royce, etc. So you'll see as more people start taking to the skies again, if we can afford it. At the moment, recession, probably not so much. But as we come out of the recession, we start flying again, going on vacation again. I think Boeing and the likes are probably going to be, they've had a tumultuous time over the last couple of years, particularly with the pandemic. And I think you'll start to see a bit of a turnaround for those guys. Are you in it, Ali? Are you trading Boeing today? Back to the SPY. So let's go back to the 1 minute. Oh, wow, that was a bit of a strange one. Look at that, a bit of stepping stones. There's the pyramid of bloody Giza right there. Then it looks like the pyramid of Giza as well. Look at that on the SPY. Very uniform. But it's good to be green again. Well, look, the best thing, companies like Boeing, British Aerospace, Airbus, those kind of Rolls-Royce, those kind of engineering companies that are, big companies, that they're worth just holding long term. Well, if you bought it at oh, you're in good 125. You're in good nick. You're a good $10 up on the share. That's nice. Good gains. Did you buy that today, Ali? Did you buy in today, or have you been holding that for a while now? Okay, so just so did anybody watch the Jerome Powell conference, the Fed conference, or was it just me? You need me to do a quick. Oh, nice, Ali. Look, sometimes it's worth waiting a week. If you can get 15K out of it, it's worth waiting a couple of weeks. I mean, come on, if you bought it 3 weeks back, that's $5 a week. Think of it that way, on average. You're just on that one trade, so it's worthwhile. It's a worthwhile trade. If we could have $5 every week, brilliant. Well, gotta say, yesterday I'm going to put down as an anomaly. We're back to profitability, which is good. We'll try and keep that going. I didn't expect to get my cover the drawdown so quickly, but fair play to AERC. Yeah, do you know what? We're officially in recession, obviously. I think anybody that says, oh, well, it's not official until we've had 2 full consecutive quarters of retraction, or you know, shut up. There's no way we're going to recover this last couple of months, you know, downwards selling in the markets in 2 weeks. It's just not going to happen. I mean, it's possible, but it's not going to happen. Come on. Let's go on the daily. So the official terminology of a recession is 2 consecutive quarters of retraction of GDP. Now, the global recession is exactly the same. So global GDP. So we've been in a downwards, a recessive market, or we've been in retraction since January. The markets all hit all-time highs in December. We had a bit of a pullback in November last year, and then we rallied up over Christmas and we hit all-time highs. Since January, we've been selling off. We've had little spikes and little rallies ever since, but we've been selling off. So we had a contraction, fiscal retraction in Q1, which is January through March, and we've been a fiscal contraction from April through June. We're only halfway through June, so technically we can say yes, there's a chance for us to come back. Realistically, it's not likely, okay, just based on how much we've retraced. So we can pretty much say we're in a recession right now. 2 consecutive quarters of you know, fiscal retraction, which is recession. So we're in a recession. Now, for us to get out of a recession, we need 2 consecutive quarters of growth. So we're now in a recession for at least the next 6 months. Put it into context. So it's going to be at least 2023 before we can even consider we've got out of recession. Now, what tends to happen is the floor usually hits about halfway through. So a recession usually lasts between 10 to 11 months on average. Of course, there are times where it lasts a bit longer. It can last a couple of years. 2008, depending on which country you're in, 2008 lasted about 6 years in Ireland, the recession from 2008. But in most other places, it lasted about 3 years. So occasionally you get recession characteristics that'll kick on, and you'll get growth 2 quarters later. So, for example, we might have another contracting quarter next quarter, and then 2 consecutive growth quarters. And you need 2 consecutive growth quarters to consider yourself out of recession. So but anyway, that's what they say. Well, getting inflation under control and getting out of recession are 2 different things. So the whole thing. So I was looking at the stagflation, and I think that's something that people have been worried about in the US. So stagflation is like inflation with increasing unemployment, so a reduction in the jobs numbers. So that doesn't look like it's going to be the case. It looks like we've got inflation, but it looks like the jobs numbers are going to remain fairly buoyant, and unemployment's going to stay under control. It's when you've got high unemployment and high inflation that they call it stagflation. So it looks not quite owing. I'm about $300 dollars down from yesterday, but I've locked my montage. I'm not, because of what actually happened. I did erase all the losses from yesterday. I got to 28,000, and I've given 2,000 back. So I thought, just before Powell started speaking, I thought I'm going to lock my montage. I've started giving it back, and I was glad I did, because everything sold off at that stage as well. So I locked my montage, and I'm just going to lock it in. Exactly. The P&L for today is 26,800. I don't know what's just happened there. I'll just find out. A 15-minute scanner just crashed. I'll just reload that. There we go. That's a 15-minute scanner. But yeah, the value of the account right now will be, so I've got 26 to add on. Well, I've got a minute. I've got about 25 to add on to after commissions and charges. Start today 119, so we're back up to about 145, 146 ish. Give or take a few bits and pieces. No, I'd say I think about 144. I'm doing back of the beam maths in my head, so it's probably going to be about 144 when you add the two together. 24 and a half plus 118 and 800. So yeah, so about 143, 300. So we're doing well on the, you know, we're doing well this month. The month of June is a lot better than the month of May, that's for sure. But we're doing well on June. And what that takes me to as well, so let me just have a look at the overall numbers for the year in terms of net profit, what that will take me to. Because that's about 414. So I'm just looking at my spreadsheet here for the year and stuff like everything. That'll take me to about 421 net profit for the year. I'll wait till tomorrow before I confirm that. It'll take me to about 420 for the year. I've got 6 months left after this month. So if I did 100,000 a month, which is on average about 5,000 a day, 20 trading days in a month, that will give me the 7-figure number that I've been aiming for all year. So I'm back on track. As of this month, I'm back on track. I thought May had wiped out the chance of me doing it, but it looks like I'm back on track. I certainly did quarter. I certainly did. That's I got 20, just shy of 25,000 out of that move. AERC. It was a really nice move. So I started trading it from when it got green on the day and the rest of the day. So whatever worked for a hedge fund as a trader, they'd have to pay. Well, the bonuses are based on a percentage of the gains they make as a trader. So the question I would ask is, could a hedge fund pay me more doing what I'm doing than I'm paying myself? You know? Because right now I keep all my gains. As a hedge fund, the bonuses might be what, 25%, 30%, 50%, something like that. So would I get to work for myself. At a hedge fund, you're in and you're working out, you're at your desk all day, give or take. It's high pressure. Your colleagues jumping off buildings because they've lost a couple of 100,000 and all that kind of stuff. I'd rather just work for myself and not have the pressure. You know? No, absolutely, Owen. If I could get an AeroClean every month, I'd be absolutely stoked. I mean, AeroClean is what's keeping me afloat this month. I mean, someone asked me earlier, why do I not trade other people's money? And I'm like, well, if I trade other people's money and have a good day, I've got to give them half the gains. Because let's say if you were to give me, let's say you give me 10 grand, you say, you trade me 10 grand, what's the likely deal with that? You're not going to be happy. If I trade your 10 grand and I make, let's say I make 20 grand with your 10 grand and I only give you 5, you're going to be like, well, I put up the money, you did the work, surely it's a 50-50 situation. So my question there is, okay, well, why would I give you 50 and only take 50% of the profits myself when I can take all of the profits myself by putting up the money myself? No, I don't trade the forex market because it's a lot riskier. It's a lot more difficult. So you don't get the parabolic movers. So you don't get the range or the volatility in the forex market that you do in the equities market. Two, in order to, because the movement across pairs is so microscopic, you have to take big leverage and big margins to take advantage of that. You end up taking a lot more risk in the forex market. I'm not saying you can't make money in the forex market. Some people do, very few people do, but some people do. Over 95% of people that trade the forex market actually lose money in the long term. There's a number of reasons for that. There's over 85% of people who day trade, regardless of instrument, lose money. So three main reasons why people lose money. The first reason is they approach the markets with a gambling mindset. And that's more true with the forex market than it is with any other instrument, okay? The second reason is that they approach the market without really knowing what they're doing. So they don't have a strategy. They don't have a methodology, a proven, documented strategy that works to work to and be disciplined against. So that's another part. And then the third part is that they don't manage the risk. They don't understand about risk management, so they accommodate trades. They move the risk to accommodate a trade as opposed to the other way around. And those are the three main reasons why people lose money. Now, there's another reason why people lose money in the forex market, and that's because it's a very low barrier to entry. Now, people ask me, if you're going to be trading equities, if you're going to be day trading on the equities market, how much would I need? And I'm saying you'll need at least 5,000. Well, you can do it for less, 2,500, 3,000 maybe, but it's going to be a bit more difficult. So I would say you need a minimum of 5,000. In the forex market, you can get in and start trading with $50. You're not going to do that with trading stocks and shares. You're not going to make enough money with your commissions and your fees are going to be too much. I mean, yes, you might get it on one of these free, fractional share type platforms like an eToro or a Robinhood or whatever. They do fractional shares and stuff, which you're not getting good. You're still going to be losing. So with forex though, a lot of these companies that are saying they are forex brokers are actually scams. I've got a call in 15 minutes with a broker, and wanting to partner with me, Ninja Trader. So I'll find out what they've got to say, but let's find out. Anyway, that's the end of the stream for today. We've had another good day, just under $27,000, and I'll be back at it tomorrow. Okay, so it depends on what your goal is and how well you're willing to risk tracement. So for example, 10k starting bank over a year. If you're going to be trading the equities market, and let's say you use a standard broker like Interactive or 212 or Trade Zero or whatever it is, and they give you a 4 times leverage. So you're going to get a 4x on a 10k account. You're going to get 4x leverage, gives you $40,000 worth of buying power. If you've got a strategy, if you've already got a strategy that's profitable and you're prepared to manage your risk effectively, there's no reason why you can't make 1 or 2% of your buying power per day. So what I mean by that is 40,000, 1% is $400. So if you're making $400 a day, you might make $800 a day. But if you're making $400 a day, let's say round it up to $500 a day. $500 a day is what's that across 20? That's a 6-figure income right there, because that works out at 2,500 a week across 4 weeks per month. I mean, you've got the phantom month as well, but 4 weeks per month. So you're 10 grand a month. That's a 6-figure income just by getting $500 a day. And could you do that with a 10 grand account? Yes, you've got a 40k buying power, but you need to manage your risk. You need to have a strategy. And I would say, don't just go in and lump your money in, okay? It doesn't work like that, Higher. It doesn't work like that. What you're talking about, I'm actually in Ireland, so I'm from the UK, but I'm in Ireland. It doesn't work like that. So the economies of scale don't work. You're thinking that, okay, if you're able to do that, it scales up and you're doing the. It doesn't work like that. So you get to a point where it plateaus, because I'm trading low float, low cap stocks. I'm trading, let's say, I'm looking mostly for stocks that have a float of, say, 10 million shares. So for me to take a bigger position, depending on how my equity is, so my equity right now is going to be close to 150k, and I'm going to have a buying power of 6 times that, which is going to be like 750k. So for me to do 75k a day, it just doesn't work that way. I would have to be taking huge size. And if I'm taking huge size, let's say I'm taking 25, 50,000 shares at a time on a 10 million float stock, I'm taking a huge portion of the liquidity out of the market. It's a zero-sum market, so you've got to, every time I take 50,000 shares out of the market, when I come to unload those shares, assuming I can buy those first and foremost and get filled, because it's unlikely in one go, when I come to unload them, the price is going to tank. So I won't be able to. I get so much slippage trying to unload them. So you're struggling with the liquidity of the market as well. So it's not exponential growth. You get to a point where it plateaus. And for me, yes, I've had 50k days. I've had $102,000 is my best day. My second best day was actually last week, where I did $63,000. But I target myself on, regardless of what my equity position is, I target myself on $5,000 a day. So what account balance, it's not so much what account balance I start to plateau, but I won't go over a certain, I'm not trying to reach a certain level. I've had, this last 2 weeks, I've had a really, really good run, and largely down to AERC, which is not a huge float stock, but it's made big moves. It's got a huge volatility, and it's a very liquid stock. I mean, AERC today is 41 million shares traded, and it's a 10 million, you know. So it would be nice to be able to get an increase in, 1% per day, because you, over a course of a year, 1% per day, like you say, you'd be a millionaire. You'd be a billionaire in 5 years. It doesn't work like that. It's like the chessboard. One grain of rice that doubles every square on the chessboard, you wouldn't be able to get to the final square, because you have more rice than there is in the world. So it doesn't work that way. You do the economies of scale don't work in that way. You've got because it's a zero-sum market, you've got to have somebody on the other side that's willing to sell you the shares or willing to buy you the shares, depending on which side of the which side of the equation you're on. Exactly, Owen. As soon as the position starts to affect the liquidity of the stock, and in any kind of significant way. On top of that, if you're getting over 3% of the float of the stock, you're going to have to start filling out regulatory forms with the SEC and things like that as well. But yeah, as soon as you start affecting the liquidity of the stock, it's going to impact the effectiveness of your trading across the board. Okay, well, I'm out of here as well. I've got my glass of wine. I've got this guy calling me from Ninja Trader, and I'll see what he's got to say. Okay, if I'm trying to pump Ninja Trader, you know it's because I've sold out, and he's paying me to do so. So just so you know in advance. Okay, I'll catch you guys later. Have a good evening.